Hi guys, welcome back to another video. In today's video, I'm going to share with you the tips that I learned from other top traders regarding minimizing your chances of losing in the market. So how you start your day is actually very important. If you check out all the profitable traders, all the big traders, they actually also talk about how they start their day. So in this video, I'm just going to talk about some of the criteria that you can also use in order to make sure that that day is a good day for you when you're going to be trading the markets and that you do not lose your money. If you're new on this channel, please consider subscribing so that you do not miss any of our future videos. Like the video, leave your comments. If I left out anything that you think is important for traders, leave it in the comment section below. If you're looking to download free forex robots, indicators, books and stuff like that, there are also links in the description box below, so visit the description box below. The broker that I use, many people always ask me, the link is in the description box below. One of the best brokers. I've been with them for more than 5 years now, and with just $5 you can open a real life trading account. So go ahead and sign up with them. Now, getting back to our video, how to avoid losing your money. The lessons that I've learned from other big traders, profitable traders, is it's important how you start your day. So what you find is the first thing that you do in the morning, because it's actually morning where I am in South Africa. It's actually around 6:30 a.m. I usually wake up around 5, but today is just a slow day, I guess. But the first thing that you do before you open your charts is go and check out news and the calendar, well, however you start. But I'm on trading economics here. I previously did a video about trading economics. It's a free website that you can basically use, almost like Bloomberg. It's not exactly like Bloomberg, but I'll just call it my personal Bloomberg. So it gives me news. You can see this news is from 20 seconds ago, this is from 2 minutes ago, this is from 62 minutes ago. Basically it's just news that's coming in, and because this is focused on trading, it's news that relates to trading, the stock market, currencies. You can see here news from 62 minutes ago from FOMC again, I guess. Then the stock market from all the countries, the commodity news, and I don't have to read a whole page to understand what has been happening whilst I was asleep. By just coming here, I can just get snippets of what has been happening. If I need to explore something further, then I can Google it, but from here I can get ideas of what has been happening whilst I was asleep. You can even come here, there's China news, so you can click on China and it gathers all the China related news, or you can click on stock market there and it will gather all the news that are relating to the stock market. And currencies, let's go back to this. There's currency here. You can actually gather all the news that has to do with currencies, and you can basically get an idea of what's happening. There's currency news from New Zealand, Indonesia, United States, Canada. You get the picture. I think I've previously done a video on this. Look for that video on this channel. Then after that, I get a sense of the news, or what's coming up or what has been happening. I also get an idea from the calendar. I usually go for the high impact news, so that's what I want to just look at. This is from yesterday, and this is this is for tomorrow. So today Thursday, there is no major news, which is going to be a good day for trading, because you're not going to be surprised by sudden moves in the markets. There is probably some news, but this website, they determine that it's not critical news. So yeah, we don't expect to see some sudden spikes that will take you out of your trade. So today will be a very good trading day. Then from this I can also even go through markets just to see what's moving, what's happening. So we have currencies there, we have stocks, we have commodities, we have bonds. I'm not going to go much into this. Sorry, something on my throat. But what I can do quickly here is to just come here and see what has been moving for today. So you can see what has been moving for today positively and what has been moving negatively for today. So that's you get a picture before you actually open your charts. Then after doing this, then I go to my charts. So now I'm on my chart. This is Euro USD. This is today's Thursday, the 23rd of February 2023. So you can see an Euro USD nicely dancing around my key level, my psychological level there. So we might actually see it come and tap into this zone or tap into that zone before it actually does that and does that. So you always have two possibilities when you enter the markets. Never ever bet your money on one movement. So there's a chance that we're going to come and tap into this zone and dropping down, or we might actually break through and come back and tap this zone. Then whatever happens from here as well, we will see. So that's just an idea that I immediately get from the. That's not a trading signal, it's just a trading idea. But when I come to my chart, is what I want to do after checking out trading economics is to go on the higher time frames. This is daily. Daily, you can start on the weekly, some people start on the monthly, just to get a picture of what's happening. So you can see on the month, on the weekly actually we have been dancing around this zone previously. 2016 we're actually in the same area. 2020 we're in the same area. 2022 we're in the same area, so we kind of come to the same area again. So now it's a wait and see game. What are we going to do now this year, this time of the year? Are we going to push up a bit and do that, or we are going to actually break through and do that? So that's where you are starting to build a picture from the higher time frames. You are starting to build a picture of what might be happening in your chart, and then as you go down the chart, when you start seeing opportunities, your opportunities need to align with what you have been seeing on the daily. Especially on the daily, I love the daily. Sometimes I go to the weekly, but I usually finish at the daily. Whatever the daily is telling me, then I can use that as my bias for the day. Then you go down to your hourly, your 30-minute, your 15-minute, and try and look for opportunities that are aligning with your bias that is based on the daily. That's how you want to do it. So if you are saying on the daily that you are looking for buys, then here on the 15-minute time frame you are going to wait for a good opportunity for a buy. You don't want to buy the top here. You want maybe somewhat of a pullback. Even if it comes to pullback around this area here, or even around this area here, then you know you can buy, and your first TP will be here and second TP will be there if possible. That's how you start to build what a picture, and you limit the number of false trades. So it's important that you do a top down analysis. It's also important that you have some criterias for trade confirmations. Some people use patterns, like they look for W patterns, double tops, double bottoms. They use for engulfing patterns. They use for you get the picture. Then some people also use moving averages. Maybe there will be a moving average cross somewhere here. then they know it's for a buy. Maybe they use Fibonacci, maybe they use channels, trend lines, and stuff like that. You need to have multiple confirmations before you enter a buy or a sell. Then risk to reward ratio. You need to also uh, use a good risk to reward ratio. Sometimes people are losing money only because their risk to reward ratio is terrible. So you need to make sure that when you win enough to cover the previous losing trades. And when you lose, you are not losing too much to blow your account. So risk management is a key element of trading. Then the final step would then be a trade execution and management. Like I told you, in this scenario, let's say I'm looking for Euro USD to come to this level. If I would catch a buy, let's say somewhere here, let's say somewhere there is a buy, and somewhere there is a stop loss, then definitely somewhere here is my first TP. That will be my first TP there. Now, as price starts moving, trade management means, let's say I entered with a standard lot here. As price starts moving around here, this is almost half point. I usually start thinking about moving my stop loss. Stop loss, I move it to somewhat of a break even, and price continues to move. Then at some point, I actually also start moving my stop loss like that, and eventually price reaches, let's say it's a good trader, eventually it reaches my first TP. If it's a standard lot, what I then do is I take out 75% of that trade, so that's 0.75. I remove it, I take it off the table, and I'm left with 0.25, which, if things continue going my way, that 0.25 probably will come to a second TP that I'll be targeting. So 0.25 maybe we'll get around there, and I take out some of that as well, and eventually you'll find that I leave maybe 0.10 to see if it can reach my second TP. But whatever happens in this area, I don't really much pay attention, because I've already taken off some good money off the table here. That's how you manage your trades, and you can always move the stop loss as well. Instead of this, you can also move your stop loss and manage your trades according to the previous structure, according to what you're seeing here. So probably you wait for price to break through here. I don't know if it's visible here. Then when it breaks through here, you also move your stop loss, and we come to this area clearly. It's clear there, then you take up to your 75%, 50%, and then you continue and you continue and you continue like that. So yeah, I hope this helps somebody. I'll see you in the next one. Bye.